Hello everyone, I'm going to be doing a special video today over a series of trades that I've taken over the past few weeks on the pound yen. Um, this video's specifically for Cam White and his Facebook group Trading the Probabilities. It's actually a group geared around Nadex binary options, which I've traded in the past and currently trade here and there, but my main focus is kind of on spot forex now. But I do still dabble around with Nadex from time to time when volatility is low and whatnot. But um, so let's get into it. This is going to be kind of a lengthy trade, probably take up my full 15 minutes I have, but we'll get into it. So we're on a monthly chart, and this video is just kind of how I do my analysis and how I enter and exit trades and manage trades while I'm in them. But I always like to get a bird's eye view, and this, is pretty zoomed out on the pound yen. You can see it's, it's kind of hard to get an idea of what it wants to do overall, but most recently, if you just look at this little block here, you can see a large demand zone. Now, the way I trade is I use Fibonacci, I use supply and demand zones, and as an extension of that, I use support and resistance zones and trend lines. But that's basically it. I don't use indicators. You don't see any fancy indicators on my charts. Every now and again I'll look at just a simple exponential moving average or a stochastic, and mainly I'll use the stochastic for just kind of identifying divergences and convergences, but other than that, I don't use them. I found they kind of hinder me more than anything. They scare me out of valid trades and whatnot. So getting started here on the monthly chart, you can see a large demand zone with kind of minor little zones here that I have marked off. And we had an explosive move off of the zone that really initiated the move out of this larger monthly demand zone. And when we came back down here, we tested it and had our second explosive move off of it. And this third zone is more pertinent to the trade that I've taken most recently, but we'll look at that on the lower time frames. I'm going to be pausing here and there and switching back and forth between charts. So this is the first pause. Okay, so this is the daily chart, and you can see the explosive move out of that monthly and weekly demand zones. And we have recently traded back down into some nice structure. We had our large corrective, bull flag or whatever you want to call it, broke out of that, and then had since kind of been putting in a similar structure or corrective phase as we did previously. And you can see I took the impulse move out of that weekly demand zone and monthly demand zone. This was right around the U.S. elections that catalyzed this move, and I used that as my anchor point. And as a trend line initiation point, I projected that forward, and you can see we came right back down there. That was in the middle of our larger zone from way back here, and I took that from like the weekly chart, but more precisely we had a kind of a smaller daily supply zone that had been used as both kind of a buyer and seller initiation point. You can see strong selling from here. Once it was broken, it came back down and retested that zone, and buyers used it as kind of an impulsive move starting point. And back and forth, you can see it's been used as kind of support and resistance. And most recently, we traded right back down into that as price was testing our a couple of intersecting trend lines here. We have our main daily trend line, our lower channel trend line that had been forming with this corrective phase here. And we'll look at more precise entries on the lower chart. Okay, so on the 4-hour chart, you can see price a little bit better, and we have our kind of our narrowed down daily zone that I had marked off. And I took this impulsive move here that really kind of initiated this extreme bullish move up, which broke this zone. We had a quick retest before price just exploded up. So that impulse move from this starting point to the high came right back down into the 78.6 Fibonacci retracement level, and this is how I use fib levels in my trading. In addition to that, we have a couple of smaller little support and resistance levels you can see that had nice reactions off of them. We have our low point. Once this zone was broken, it came back down and retested. That was kind of right around there, that intersecting point. We also had this little high wick point here associated with this little minor impulsive move of selling. So I used that as kind of another confluence area, and all those kind of came together right around this point. One other thing that I use is profit target extensions. So I'm looking for kind of smaller time frame profit targets, usually based off the 4-hour charts, and those are all stemmed around Fibonacci retracements and looking for extended moves in the continued direction, essentially extensions that people use as potential profit targets. And you can see from this move here that broke this structure level here, we had a nice retracement back up into the 50 and 61.8, which lined up pretty nicely with that downtrend line on the 4-hour chart. If I tighten this up a little bit and make it more precise with our wicks here from our high point up there, perfect little test there at the 61.8 fib retracement and our downtrend line. Shot down straight to our first extension profit target, the negative 23.6. Had a little retracement back up into this broken structure level before heading down and tagging the negative 61.8 Fibonacci profit target extension, whatever you want to call it. And that lined up perfectly with our 78.6. So you can see all this confluence right around in this area. All these intersecting points that gave me my reason for entering this trade at the test of these levels down here. We're currently on the 1-hour chart, and this is my entry chart and how I kind of hone an entry. I have my major levels here that I'm interested in. I want to see those tested before I really kind of start considering entering. And I enter on the first test of those levels generally, unless I miss it. I rarely use limit orders because I like to see how price is reacting on its descent or ascent up to my levels. So, as you can see, we have an extra little tidbit of confluence on the 1-hour chart, which I do kind of a minor markup on the 1-hour chart to really kind of hone down an entry. And you can see a quick spike down into these levels here, and we began seeing some bulls trying to step in, some buyers trying to step in as we were approaching these levels, which is something I like to see. But the sellers just really being magnetized to those levels, to that negative 61.8 fib retracement, that daily trend line, these minor trend lines, the channel bottom. Those really can act as a magnet, and on this side here, you can see my entries. I have a hard stop, meaning if price reaches that level, then I want to be out of the trade so I can reanalyze that. And in this case, it was just below this zone. So not too much risk on this. You know, my entries were more or less, my first entry was kind of as price was dipping down into the demand zone. And the second entry I had was just about 10 pips later down as price was testing these levels here. This first entry was a limit order, I do remember that, but this second entry was manual as price was spiking down and testing these levels here. And I do kind of sometimes a limit order just to ensure a fill. You know, I'm comfortable with the risk that I place on each of my trades. So initially, you know, I just wanted to kind of front run my order a little bit to ensure, excuse me, to ensure a fill on these orders. But once I saw price, spike down, I believe it was perhaps and put in this kind of buyer candle here, or lower wick that got sucked back up above the zone, then I was confident in manually entering down here as well. And people ask me sometimes, why are you adding to a losing position once you enter? You know, because you'll notice a lot of my entries, I'll have an initial entry and then like a second or third entry. And I don't consider that adding to a losing position. Because my hard stop hasn't been hit. My stop loss was down here about, for my initial entry, probably about 50 pips or so, and then my second entry, which was kind of around here, maybe 30 or 40 pips. So that's still a valid trade for me, and that's why I didn't. That's why I don't consider myself adding to a losing position if I get in at a better price. Had price blown through my stop loss area and been trading down here, and then I was starting to add more without reanalyzing, yeah, that's adding to a losing position because I was obviously wrong. These levels weren't respected like I had anticipated. Okay, for the first trades, you can see my entries down here and my exits. They're in blue. My first entry exit was at 140 or 134 pips, and you can see why I exited. We had once we broke this trend line here, this kind of deep, extreme downtrend line. Once we broke that, we ran right back up into previous structure, and I drew a second little trend line. So that was my first exit. That was kind of my first target. I want to be banking some profit. I'm the type of trader that I will take profit on part of my position and then trail my stop to break even on the second part, which is what I did here. Now, as we consolidated here and then had this impulsive move up, I trailed my stop up just under this little wick point here, which is where I ended up getting trail stopped out on the second part of my position for 112 pips. Okay, so I'm going to have to split this into two parts, but so that was, I just explained my first entries and my second, or my exits for the first part of this trade. The second part of this trade, you can see over here, was 3 separate entries. And this wasn't too long after I had gotten trail stopped out on the first part of my entry. And the reason why I felt comfortable pretty much entering that day or that next day, I'll go ahead and explain in the beginning of the second part of the video.